What's up, everybody? Just want to take a quick second and let people know that I am self-supported. I now put all of my episodes on Substack for paid subscribers. I put them up early, and then 24 hours later, I release them to the public on all my platforms. I also have Venmo, PayPal, Cash App, Buy Me a Coffee, Zelle, a P.O. Box, and Locals, Patreon. And all of these, all of the links are in the show notes of every single episode I put out. So look forward to continuing to, provide great conversations. And thank you all for your continued support. Vince, how many shows have you done this week or the last 2 weeks talking about all this stuff?
Like 9. You're the last one. The best for last.
And that's it.
Wait, are we recording?
Yeah, it's on. Then that's it. You're going into hiding after this, or you're going into?
I'm going into hiding. I'm going into hiding. Look, I mean, it started off with a mission. I was excited about it. Let's like the whole Messiah who wants to explain everything, like the teacher in me. And then as time went, I was like, Jesus, what am I talking about anymore? Because I talk about it, and the next day there's other news. It's been a very real time situation. And now we're at the end. I've actually said no to a couple people, which is not like me. But I said no to a couple people because it's Friday. I've got to go see a couple friends at Casey's that owe me dinner on a bet that I had about silver and gold. And I want to see a friend of mine. And I'm going to mention his name because he watches your show. His name is Robert. We call him Bobby Boots, and he has a friend named Vern. I'm saying this because I'm trying to get other people to watch your show. Bobby Boots and Vern are silver guys, and we're big silver guys, But I'm just mentioning them because, a shout out to them, for lack of a better word. Upstate New York and Connecticut, silver bugs. No room for gold in our lives. That's when we talk. It's like gold sucks. It's silver or death. That's it. That's it.
Well, Vince, you can't fight off the vampires with gold, man. You got to have silver. You got to have a lot of silver.
Exactly. Look, I mean, silver is used for self-defense. What are you going to do? Throw gold bricks at people? Silver bullets, silver stakes, silver crosses. I mean, it's an antiseptic. You have to have silver. Meanwhile, it's down 5% today, so shit.
Is that what it is? Down 5%?
Oh, yeah. Like today's the day where it starts to crack. That's, by the way, this is my last interview. It's probably my last interview, whether I want it to be or not. But yeah, this is it. That's why I'm in a good mood. I'm like, this is it. It's over. Talking to Mike. I'm having a good time. I'm going to get a couple beers after this. And we're done. We're done.
Do you think the party is over, or is it just taking a little lull, a pause in the music for silver?
I think the way to answer that is to put a time frame on it. The party could be over or for 1 to 3 months, or there's a lull for 1 to 3 months. Depends on how you're looking at it. But no, this isn't over by any means. I mean, silver's in a very, speaking technically now, right? I'm not a technician, but I'm going to paraphrase a couple of technicians that I listen to and trust. Silver's in its more volatile mode now. So it's kind of like we're on the cusp of being in a bubble. We're not in a bubble. It's not a bubble. But we're on the cusp of being in a bubble. And so this retracement today is very good. Look, I think what we're looking at today, and we'll get into that when we talk about silver, I know you want to talk about that, is we're looking at the marketplace is finally acknowledging that the crisis at the LBMA, the London silver problem, is solved. Whether it's solved for 30 days or whether it's solved for 30 years, it's 30 days. So there's a Band-Aid on the bullet hole, but that's done and the pressure is off. And so a lot of the hot money and speculators, they're getting out. Could it drop more? It could drop a ton more. Yeah, but that's okay. I don't care.
This episode is brought to you by McIlvaney Financial Group. Their advisors bring a depth of knowledge and experience that allow them to serve their clientele with care, ensuring their financial needs are met now and in the future. Personally, I'm not saying cash is worthless, but you can see what's happening. It's worth less every year. Gold is the opposite. Click on the promo link in the show notes or go to www.mcilvaney.com/coffeeandamike. So, I had Eric Young. What a great conversation. I told him this earlier. The two of you, I mean, hopefully that happens more often. And, selfishly me, I'd love to have you both on. And I saw somebody write about having both of you and Luongo on as well, which that's another
Yeah,
can't miss television. I love
yeah,
these mashups. I love having, like celebrity, what was it, celebrity death match they used to do on MTV back
yeah,
in the
yeah,
day,
yeah,
which
yeah, yeah,
MTV
yeah.
just ended. I saw like a couple days ago. They're ending,
Did
MTV's
they?
ending. Yeah. But hearing you two guys talk about what's happening in silver, and Eric and I said this, and I use an analogy that I'm going to share with you. It's and tell me if you agree or disagree. The idea behind it was there's all the silver on paper, but yet somebody came in or some powerful group came in and decided to take out the physical, leaving a huge shortage in the LBMA.
Yeah. Yeah, yeah. Eric and I are one or like 101%, if that's possible, on the same page on this. And I can go into it as deeply as you want, but do you know, remember off the top of your head what Eric said? Or you want me to start with that?
He was saying in relation to BRICS that BRICS was responding and had the ability to come in and remove the physical standpoint.
Right, right, right. Okay, there's just just quickly, the world is under the impression that the London bullion market is the spot market for physical metal. And it has been for a century because all the wealth in the world was in Europe. And so all the gold is there and all the silver is there. But over the last 30 years, because of policies, actually last 50 years, since 1971 when we went off the gold standard, it's become advantageous to all these bullion banks that were trading in physical gold to sell more than they had. So that's rehypothecation for your financial types. And the reason they could get away with it in gold, they're not getting away with it in gold anymore. But the reason they get away with it in gold is because I'm a bank in London or Europe, and I have access to a lot of gold. The European Central Bank, the Bank of England, all the European central banks have their gold, and they don't use the gold. What I mean is like they don't build things with it. They don't use it for financing. It's not spoken for. It's just sitting there. It's a piggy bank that they don't spend. It's an emergency fund. And because of that, the bullion banks got smart and said, wait a minute, I don't really need to have the gold. What I can do is I can short it in the US on the COMEX in the futures, and I can get an interest rate on it. And then I can have the gold here. And if I ever need the gold, which I won't, because nobody wants the gold, nobody wants the gold, right? I can just borrow it from a central bank. So they lease the gold, they make delivery of the leased gold, and they wait 30 days and they get it from someone else. And it's easy to do with gold because all the gold ever mined is still available. It's not hidden in electronics. Maybe it's starting to become that way. It's above ground. There's no real big industrial application for it. And it's all in these central banks all over Europe and the US. So it's leasable. You can't destroy it. You can't create it. Let's use it. So it becomes a lease lend business. So lease it, borrow it, and that became the industry. Now, once upon a time, between when digital cameras took off and now, they were doing the same thing with silver. So with silver, it's also something you can't destroy. Okay, it's hard to get back. It's in technology. It's used heavily. We need to get it. But over the years, the price of silver had been suppressed so much that the bullion banks, this is my opinion, but it's probably right, said, well, what we did with gold, we should do with silver. So I've got 1 million ounces of silver in my own vault, and I have access to all the silver in Europe, which at one time central banks had some silver, but there's still tons of wealthy people with silver in storage, old money. And so I'll start selling the COMEX future at, let's say, 4% over spot, and I'll capture 4% annualized, right? And after COVID, and more importantly, after the the Russian confiscation when the Ukraine war started in 2022, the de-dollarization process started. And so the de-dollarization process caught a lot of the bullion banks flat-footed. But they got bailed out because they could go to the central banks and say, "Can I buy some? Can I borrow some?" There was always someone out there with it. There was always another dealer of gold that they could get it to backstop them. And it worked. The price went up, but there was no panic. There was no dislocation. There was no short squeeze. Literally, we just had a short squeeze. And there was no short squeeze because I could borrow yours. I could borrow his. I could borrow hers. It's all the same thing. But see, between the time that digital cameras came out and say, whatever that was, like 94, when they started to get popular, and 2000 and let's say 7, there was no need for silver industrially. And so it was just laying around. Like, you could get silver. Silver is a waste product of mining nickel and copper and lead and zinc. Like, I'm a zinc miner. I pull the zinc out of the ground. I take the rest of the rocks and I throw acid on them and I pull silver out. It's called heap leaching. They may not do it that way anymore, but that's what they did. So silver was this waste product, that would just lay in a pile. And so the bullion bank, so I could just go get it from there and there and there. But now the technology comes that needs silver, and the banks are still playing that game, that gold game with silver. And this is, what Eric and I were talking about. And we start to see, I identified and got verified in 2023 with a gentleman named Bai Jiaojun, who's in the mainland. He was saying to me that China is running out of silver. Now, by that, I mean, they have plenty of silver, but their mines are depleting. It's kind of like peak oil, peak silver in China. And they're going to, he's what he's saying to me, they're going to start buying more offshore. They were pretty much self-sufficient for silver. So they started buying more. They started buying it from Latin America. They started buying it from the COMEX. They started buying it from London. And the thing is, they were smart in the sense that they were buying it from Latin America before it hit the market. So they were buying those piles of waste product. It's called concentrate or doré bars, which are a mix of gold and silver. And they were buying them and refining them. So you're not seeing it in the vaults. You're just saying, okay, there's plenty of silver in the vaults. And then they started taking the metal out of the vaults. Now, the London guys, the bullion banks in London, who face everyone who's buying it, say, yeah, we have no problem with it. We got plenty of silver. We'll do the same thing we did with gold. And sure enough, they did it during the repatriation, which started in November of 24 into 25. And so that started. Then they did it again with the Liberation Day or the Liquidation Day, as Roberto Rios said to me earlier today. And people started to worry about the silver because the answer was there's plenty of silver. It's just not where it needs to be. And that's because the world's fragmenting. There was a time when I would arbitrage gold in Japan to the US, and I would do it financially. I didn't have to deliver the gold, but now you do because nobody's friends anymore. Mercantilism. You can't financially reconcile problems when you're not talking to each other anymore. So the bullion banks are still doing this whole financial thing. Oh, we'll just borrow from him. And they go to borrow it one day and it's not there. How do I get it? Where do I get it? And so the lease rates start to run up. And now there's all this extra silver in the US that we pulled back at the end of the year last year. And there's all this extra silver in China. This is what's happening right now. The US has all the silver London needs for 6 months. China and India have all the silver London needs for 6 years. So normally you would just say, okay, you borrow it. But the US is not lending the silver. China is not lending the silver. And so all these shorts, this is the point. This is the point that Eric and I have been making. The LBMA at its hub is not a physical market. It's an interbank dealing market, which means you've got 4 banks, more than 4, but 4 banks who borrow silver from each other on paper and make delivery of it. And then they say, I'll get it back to you. So let's say you and me and 2 friends of ours are in a neighborhood and we're all bakers, right? We're all bakers and we all deal in flour. I'm running out of flour. So I knock on your door across the street. I said, "Hey, Mike, can you lend me a bag of flour? I gotta make a cake." And so you go, sure, no problem. That's a derivative. I owe you the flour next week, right? It's a loan. But nobody knows about this. So it's not really physical, it's derivative. So what's happened is, and this is what's happening right now, Robert Gottlieb has said it, Eric and I have said it from different points of view, is these four neighbors that transact in IOUs with each other, they stopped trusting each other to be good on their IOUs, on their markers. And so when that hub of the whole market, the hub of the bicycle wheel, ceases to function, you get a credit seizure internally. Maybe it's a silver seizure, maybe it's a money seizure, but you get a seizure in the gears that keep the London spot market going. Now, there is plenty of physical, but the point is you need to have a promise from it, and I don't trust you to give it back to me, so I'm not going to borrow from you anymore. And so they start leasing it. They start running around, and there's no central banks to lend it to them. And so there became a panic. And the price of silver in London, which is supposed to be here, let's call it $45. And the price of silver in New York, which is supposed to be here, simplifying it, let's say it's $46. That's the interest rate. They're short COMEX silver as a hedge against their physical bullion. And the COMEX silver goes and it expires and it becomes spot. And someone says, I want that silver. And so now you're a bullion bank saying, okay, here's the silver. Can I borrow yours to your neighbor? Your neighbor's like, I don't have any. You're screwed. And China says, I want my silver. And everybody wants their silver. And as a result of that, the London market, which doesn't have enough silver, and the US market and the Chinese market, which has plenty, the London market goes above both of them. Same silver, you just got to get it there. Like, in order to make, this is Eric's number, in order to make London run as it should run, as the global hub of silver, you need about 588 million ounces of silver need to go there. That's their buffer. That's their storage that they need. They need about 188 million ounces of silver. That's five. This now I'm tying together what Robert Gottlieb said, what Eric has observed, and what Josh Fair, the CEO for Scottsdale Mint, have said. I speak with all three of them, and the conclusion is to make London a functional hub again, you need 188 million ounces of silver. To get 188 million ounces of silver there in an environment where nobody's doing IOUs anymore, you need to fly 500 jumbo jets filled with silver there. That's not happening. And so the market went like this. It went, whoop, and now we're coming off a significant amount. But the bottom line is London doesn't have enough silver. Is that why we're trading $45? No, we're trading $45 because they want the silver. It's no longer a fictitious abstraction. We need it for AI. We need it for electrification. We need it for military applications. And I believe pretty soon we're going to see the BRICS say we're going to use it as good collateral for financing. I'm not sure of that, but I think that. And as a result, you need the silver. And for some reason, the US said, no, we're not going to give it back to you. China said no. Now they're letting it happen now. I think somebody cried uncle. And so they're going to have it happen. So that's the situation. Silver is, the expression is unobtainium. That's what the silver bugs say. And that expression comes from apparently back in the day, like during World War II, when they couldn't get a metal for making like copper or silver, they'd say it was unobtainium. So that's like a World War II phrase. Anyway, so that's silver. Silver is in the beginning, if you want to look at it technically, of a move I'm not predicting this, please don't hold me to that. Silver's in the beginning of a move that could take it two times double in the next, I believe it's going to go to $144 within 5 years. Now that's because we made it a critical mineral. We made it a critical mineral. That's why it's not going back over there at a fast rate. We restricted the supply. I believe it'll take a path to $144 over the next 3 to 5 years, simply because that's what lithium did and that's what uranium did. But there are other people like Michael Oliver who thinks that technically speaking, we're in an environment now where it could double inside of 6 months, which is crazy. But he's not he's not a loose cannon when he says things like that. I understand where he's coming from. So that's silver.
Well, and this is one of the things I said to Eric, and I've said this even to people I've spoken with, personally. And I by no means am an expert at all in any of this, but generally, and I heard a conversation Matt Smith was having with Doug Casey last week, and he was talking similar to what you just said, but based upon gold, where gold it has to. I don't know if you use the word has to, but it's got to go up because the governments it benefits these governments for it to go up. So I look at it's a real Christ Investing Substack that came out this week talking about rare
Right.
earth minerals. Doug
Right.
Casey, rare earth minerals, and how the government, the United States, they have to have this. They have to start building within or not building mining here in the United States because they're so dependent
Right.
on China. So
Right.
you look at these companies or these funds that are American based for rare earth minerals, a lot of them, or if not all of them, are going to go up because the governments need them to go up. They're not going to let them fail.
Right. That's right. I mean, that's the reindustrialization of the country. So first of all, uh, Matt and I are mutuals. We approach. I think we have the same conclusions from different perspectives. Crisis investing and what have you, and Doug Casey stuff. I'm a huge fan of them, especially if Doug's been around forever, and Matt is like uh, more in line with me. But uh, yeah, I read their stuff as well. The gold thing, just to quickly comment about the gold thing. Gold has to go up, and it has gone up. This is not a pushback, but there's a narrative out there now that's caught on, and the narrative is not de-dollarization, which is what people like me and Eric and you and Matt have been talking about, and Doug Casey been talking about for the last 5 years. The narrative is debasement. It's the same thing, but the debasement narrative has caught fire in the American normal community. And the debasement narrative says this: we need to make America great again. Donald Trump has just passed a bill, one big beautiful bill, and that bill, basically the budget, uh, licenses companies to spend more to develop rare earths, to develop chips, and we're going to subsidize them. We're going to invest in them. We're going to give them money. We're going to give them accelerated depreciation, and that's real inflation. And so American investors have been told by bullion banks, they're not just bullion banks, they want to make their clients money, have been told what you were saying. These companies can't go down in the long run. If they do, we're failing as a country. And so the government's going to print money. Doesn't have to be Fed money printed. Treasury is printing money right now. It's another conversation. The Treasury is printing money. And instead of having that money go to banks at Fed level, it's going to companies. Here's money, spend it. Here's money, build a factory. Hey, that Boeing 747 you just bought, that you could depreciate 5% for 20 years, you could depreciate 100% of it this year. So what does that make me do as a company? I buy five Boeing 747s. That's inflationary. You want to give me a tax deduction for building a building? Done. I'm going to build a building. I'm going to buy cement. I'm going to buy concrete. I'm going to buy steel. And so Americans understand that. So let's pretend, if you want to look at politically, the debasement trade, it's a great word. If you're a conservative who's worried about fiscal responsibility, you say, debasement. The dollar's going to get weaker. I buy gold. So you buy AI stocks and you buy gold. If you're a Democrat, and I swear Democrats are probably buying more gold than Republicans are now. They're going to Costco with their little shopping carts and their Karen outfits, and they're going in there going, I'll have the big peanut butter. I'll send my kid over to get a slice of pizza, and I'll buy a couple gold bars. And put it in their Land Rovers and drive home with them. But I guess what I'm saying is the debasement trade on the left works like this. Well, I don't like Donald Trump. We shouldn't be spending all this money. He's bad for the country. I'll buy gold. And so you've got a unification along party lines, you've got a bipartisan gold buying. Here's your title, bipartisan gold buying. Anyway, you've got this debasement narrative catching fire in the US at the same time that the banks are saying gold's going to 5,000. Gold's going, I mean, who the hell says that? Banks never said that until this year. It's almost like, tinfoil hat, it's almost like we want the price of gold to go up. When I say we, I mean government. Because at some point, if gold goes high enough, we revalue it, we use the funds to retire the debt. Ideally, we probably won't, but that's the idea. We can reduce debt with higher gold. Meanwhile, you make China chase it higher and buy it at higher prices if they still have to buy it. But all in all, gold here means the dollar's good. Gold here for America means the dollar's good because we can revalue it and retire debt. I'm not saying that's easy to do, but I'm saying that's what we can do. Gold here is not high enough. It's like the worst of both worlds. We need it high enough to retire. Like we can retire probably 10% of our debt with gold if we revalue it at current prices. Now, we can retire a lot more than 10% of our debt by using it tactically in the yield curve. Like basically, it's a QE without printing money. That's the idea. It's a gold QE, and it would work really well. So when you say to me, we benefit if gold goes higher, yeah, as long as oil's cheap, we benefit. We need cheap oil to rebuild America, right? That keeps real inflation down. So if the gas is still cheap at the pump, Americans aren't going to care. If gold's going up, it's just another bubble in their mind. Like, oh, it's gold. I want to own gold. And then it's become something desirable to own. And that's it. So I think Matt's right. I think Eric's right. I think Doug Casey's right. And Robert Gottlieb is right. I think gold is destined to go higher because of all the things we're talking about with a new thing now. And the new thing is the American people are figuring out that we need to spend to manufacture again. And that's still no guarantee. So either we spend to get inflation and then work our way out of it productively, or we spend to get stagflation and gold goes up. So gold goes up under 3 of 4 scenarios now. And that's it.
Well, what is the negative outcome or the negative a negative from what they're attempting to what appears that they're attempting to do with this, and how will it impact regular people?
Okay. That's the stagflationary risk, and that's actually that's the right question to ask. Uh, if for whatever reason, for multiple reasons, the United States has decided we must retool our industrial side and we must spend money, well, that money needs to go to the right things. So you're not building a bridge to nowhere. You're not taking money and building something that's not needed. It has to get to the chip factory it needs to be built. It has to get to Arkansas where the rare earths are that we're going to drill for. It has to get to the refinery that we can refine copper more efficient. We don't refine copper. We have tons of copper here. You know what we do with it? We sell it to someone else and buy it back refined. I mean, it's classic our American steel, copper. We need to make metals again. We need to do all those things. So the government, if it were to, this is where the big ifs come from. If the government were to allocate that money properly, then we would have, let's say, 3 to 5% inflation for the next 2 years. And then as we started to make goods and export them, inflation would die down or productivity would go up. You would have to own stocks. You would have to own stocks to be okay on that. And that's the point. If we're successful, stocks will continue to go up, hedging the inflation as productivity comes in. Um, but what if the government doesn't allocate the money properly? What if it goes to $500 ashtrays and $1,000 hammers, which we know happens all the time? What if that money, even if it's well intentioned and the politicians are skilled, let's pretend they're not, but let's pretend they are, that money will still go to funding pork. Oh, well, you're going to build a factory in Phoenix for chips? Well, for me to say yes, I need to have a Starbucks in Iowa. Like whatever. The point is, everybody starts adding pork to it. And so, if it gets spent inefficiently, you go from inflation leading to productivity to inflation leading to stagflation, meaning we don't make anything, nothing gets done. Rare earths aren't pulled out of the ground for 5 years. We muck up our relationship with other countries that have rare earth. Let's pretend that Argentina goes south. By the way, we just rescued Argentina. You know why? Because they've got lithium. They've got rare earths. We're going to be like, we've just colonized economically Argentina. We give them money, they give us their stuff. I mean, that's it. Like, that's our new Saudi Arabia down there. I mean, I joke that they were Israel. It's sort of like a Saudi Arabia Israel combo. But that's the idea. So if we don't spend the money properly, if Argentina has a civil war, and if we start building bridges to nowhere with the money, well, that 5% inflation becomes 8% inflation with no way of getting out. So, to your older listeners or your younger listeners who have a sense of history, right now, right now, the analog is it's 1973. And in 1973, the Fed, between 1972 and 1976, monetary policy eased and fiscal policy was spending. We were spending a lot of money, not on retooling the economy, but we were spending a lot of money. And during that time frame, we had inflation going up, but the market keeping pace with it because people were spending money and making money. Car costs more money, I'm making money. Unemployment was low. Everyone was working. It was a Democrat's wet dream. And then in 1976, for some reason, I mean, I know the reason. The reason was industry said, wait a minute, we're paying our union people too much. We're not making enough on our profits. Screw it, we'll take our money out and put it in bonds. And so capitalism in 1976 went on strike. And between 1976 and 1980, we started inflation going into stagflation. So if Trump wins, if Trump gets it done, it's 1973, 1972 going to 1976, an economic boom based on spending that makes the economy better, one way or another. If he fails, or if he can't, if he's blocked from doing what he needs to do, however you look at it, it's 1976, and we're spending on bridges to nowhere, and the price of strawberries will go to infinity because we're not buying anymore from Peru or wherever we get them, and we have to buy Californian strawberries, and we're paying, former white collar workers $20 an hour to pick strawberries. I mean, that's where we are. It's either 1972 or it's 1976. So that would affect us with higher than normal inflation. Let me just simplify this. The baseline for inflation, if it was 2%, now it's 3% to 4%. Period. That's just a fact. So if where we used to have 4% unemployment and 2% inflation, we now are going to have 4% inflation and possibly 6% unemployment. Tomorrow, no. But as AI kicks in, and I know you want to talk about that, as AI kicks in, it'll make the unemployment rate go higher. The only reason it hasn't really spiked yet is because we're throwing out immigrants. That's what's happening right now.
Do you think, you bring up Argentina, and I find it, Milei is a libertarian, right? Isn't that what he,
No, but yeah, he says, I'm sorry, I don't mean to correct you. Yes, that's what he's sold
that's his
himself
shtick.
as.
That's his shtick, right?
Yeah,
Libertarian.
that's
But,
a shit.
but yet he
Exactly.
crawled over the United States, and what did we give him? 20 billion? 20 billion,
Yeah,
I
I
think?
don't even know the number, but yeah, we literally like Mike, we literally said to Argentina, and by the way, this is a template that we're going to do all over the world. We literally said to Argentina, we'll buy $20 billion worth of pesos. We bought pesos and gave them dollars. We also bought their stocks and they bought our stocks. We're creating like a Japanese keiretsu internationally. We're right, exactly. Your point about Malay is not lost on me. I'm a libertarian. Can you bail me out? Like, come on. Like, he's not a libertarian. He's he's a modern puppet for the US, and now he's more of a puppet. And that's not necessarily a bad thing if you're looking at the US as needing to survive. It is a bad thing if you're a free market person. There are, look, neo-Keynesianism, neoliberalism was fake free markets. We're not going towards open free markets. We're going towards government owning a piece of a company. I voiced my concern about this before, and I'm still concerned about it. We're going towards controlled economy. We're going towards authoritarian mindset, and we're colonizing Latin America and cutting deals like we did it with the Saudis. In the past, we bought your stuff and you bought our bonds. Now we're going to hopefully sell you our stuff and you're going to buy our stocks. I mean, it's a sham. It's an economic sham. But if you look at money from a ledger accounting concept, it's actually not stupid. We need to do that.
Is that the same thing in Venezuela then? Because it's not about blowing up narco boats. I mean, I have a hard time believing that. I mean, is it Miami Vice now?
Yeah, exactly. Listen, those narco boats are a big problem. We need to get rid of those. No, I'm just kidding.
Yeah, because
No, I
we're in a
mean,
superhero movie, Vince, and the Avengers have to come and blow up the narco boats,
yeah, yeah, yeah.
and then we won't. There'll be no more drugs that come into this country.
No more drugs. No more drugs. Wait, wait. Right, exactly. Meanwhile, I don't want to go down the rabbit hole. But it's like, oh, Venezuela will just send the boats to Argentina. But I mean, the metaphorical boats. But yeah, I mean, if you this, by the way, this dovetails with stuff that's been going on for a couple of years now. And if you want to look at the BRICS model, and I'm not saying it's better than our model, but China became essentially capitalist, and we were hoping they become democratic. They didn't. They centralized, they stayed centralized, and they created a BRICS Road Initiative. They started colonizing countries. We manufacture, buy your stuff from us. Buy your stuff from us. Don't buy it from anyone else, buy it from use yuan. This is happening. It's happening over there, right? So what is that? That's them making their supply chains local. That's them deglobalizing and becoming a regional power. So what's the US have to do? Well, we've got to do a Monroe Doctrine. Monroe Doctrine. We've got to onshore, friendshore, and reshore our supply chains. We've got to build our own stuff. We've got to manufacture our own stuff. And we've got to get customers to buy our shit. So what do? Well, the Americas are off limits. That's our place. So the world used to be left and right very mobile. Now it's not. It's going to be north and south very mobile, right? The BRICS are going to be doing their thing, and we're going to be doing our thing. So Argentina is our landfall. It's like our Israel in that sense, where we're going to invade Brazil. We can't have Brazil. We can't. It's like Iran Contra all over again. It really is. Like we're going to go in there. We're not anti-communism. We're anti-BRICS. It's not communism. It's capitalism, but it's not democracy. So let's shoot a couple boats. Let's shoot a couple boats. I mean, really, like we're just begging someone to bomb us in Venezuela so we can go in and just nuke Venezuela. Chevron's already operating there. Chevron, you come in, you get all the oil. We need oil cheap, and that's the idea. That's the idea. We're colonizing. We're doing what China's doing late.
And at that point too, you're prying Venezuela away from BRICS.
Right. Well, that's actually an interesting point.
It's like a big game of Risk. It's like they're literally playing Risk.
Oh yeah, yeah. And like it's like, hey, we're bombing Venezuelan boats, and we're calling Brazil and saying you're next, you're next. Like God forbid if Brazil does something wrong, like they're done for. But that's true. That's true. I mean, look at El Salvador, right? El Salvador is our buddy now. 5 years ago, they hated us. Uh, uh, Argentina, our natural resource now. Like we're in danger of losing an exclusive relationship with Japan simply because of where they are. They've got to live with China. So we're going to retaliate and say, don't tread on me, but it's for the whole continent. Venezuela's time is short. They would be the new Iran. They're poor bastards over there. It's like, we're going to do that to them. Sure.
Well, and it's the United States is moving into, and you and I talked about this before. They're mirroring a model of China,
Yeah,
public-private
yeah,
partnership, mercantilism.
yeah, yeah, yeah. It's I mean, look, this is the part that I'm scared about. You see, just to recap that whole concept, the United States was very successful for decades going into a country and getting capitalism in there. And once capitalism got in there, democracy would follow it, freedom of choice. And so green shoots, voting, and that would happen. And then we would do color wars and we had to push them. And we tried it with China in Hong Kong, the color wars, Tiananmen Square, didn't take. They really had their shit together in keeping democracy out. And so over time, the West, democracy, using the US as an example, capitalistic democracy, right? The governance is democracy or democratic republic. The economics is capitalism. China was communist communism or communist socialism, right? Socialist economic, communist governance, authoritarian, right? And so they went, hey, capitalism's not that bad. We'll use capitalism. And that's what they're doing. But democracy, no way, guys. It's not coming in here. And so 30 years later, we're like, well, they're doing pretty good. Maybe we should be a little bit more authoritarian. And Biden comes in and preps us with the first generation of authoritarianism, and now Trump is doing it economically. Biden was doing social authoritarianism, lockdowns. I mean, Trump did it too, but lockdowns, give people money to stay home, have them be lockdown consumers, Antifa riots to blowing up trains, all that shit. And what's Trump doing? Trump's doing the next level of that, which is corporatism. Corporatism is partner with your industry, centralize control over. Intel sucks. Buy a piece of them, they'll get better. Give them even more government contracts. Buy stakes in rare earths. And this is extremely smart. I'm not saying it's successful, but it's extremely smart because when the US buys a piece of a rare earth company or Intel, you know what we're saying? We're saying to Saudi Arabia, don't sell your treasuries, invest more in the US. And we're going to prove it to you because we're going to buy companies in our own country. We're not going to let them fail. That's corporatism, which could lead down the path of fascism. Corporatism is the grandparent, the parent of fascism. And in order to get fascism, you need to have racism. Uh, but if we don't get fascism, we might just get a little bit of socialist, corporatist uh, nepotism. Everyone gets a bailout. That's the socialist version. Yeah, it's bad. It's bad. We need to be productive, and I'm petrified of that because even if we were 1,000% successful in doing this, what you and I are talking about, we still got to get people to buy our shit. China's not going to buy our shit. Not that China's doing well. They're not selling to us anymore. That's their biggest customer, but they're going to survive. And they're going to start making their own people buy shit. They're going to become consumers of their own goods. And that'll make them an extremely powerful engine. Saudis will be selling oil in yuan. Hopefully, the price of oil is $5 a barrel so we can bankrupt them. That's what we're doing. Venezuela, $5. The lower oil goes, the more power we get. The more power we get. And even though it helps China, doesn't matter. We believe we're going to out-manufacture them. Who knows? But it's bad. We're moving towards authoritarian. It's going to get worse before it gets better. I mean, like I'm worried about it. Yeah.
What is your biggest concern with everything going on right now? Whether you're talking abroad or like within the United States, and let me share with you my thoughts, and you tell me
Yeah.
what you
Start with
think.
you.
What's happening in Chicago and Portland right now, and this is where
Right.
I've mentioned this with a few other people. This whole deployment of the National Guard, I think, is a very slippery slope. Now, I don't know what the solution is here with it, whether you deploy or not deploy, but it looks like we're in a civil war. I had Sam Faddis on yesterday, and he was talking about Fort Sumter in Portland, where Chicago too, where they literally, the mayor of Chicago created ice-free zones based on an executive order.
Yeah.
Portland, they're telling both the mayor and the governor is giving the middle finger to the Fed, saying we don't want you here, we don't need you here, we're gonna do nothing to help you. That's a civil war to me, or the
Yeah.
start of it.
Um, The domestic thing for me is kind of simple, but not easy. You know what I mean? To your point, um, you have urban blue states, very urbanized blue states, rejecting the rule of law. Um, and in that sense, the federal government can step in, and you've got a federal government that has started something that didn't really need to be started from many people's point of view. I mean, we were living in a worse environment 2 years ago, and now all of a sudden we care about it. But that's fine. It's all part of fixing things. But look, I'm concerned about the Civil War aspect. I mean, I don't think a literal. So here's what solves the Civil War. The federal government says no money until you let us do what we have to do. That's how you do it. Like that. I mean, ultimately, this is what happened, right? Ultimately, I'm building a building in Chicago, right? And I'm going to get federal grant money to do that. And the federal government says, no, we're not giving you the money because you need to have wheelchair accessible, something like that. And if you don't follow federal rules, you lose federal money. I mean, it could be like Ford in 75 when he said to New York, you're going to go bankrupt, they're not bailing you out. It's the same idea. I mean, that could happen. It really could happen. I think the economic vice grip is what's going to come next. We're going to withhold money from these cities. And the fact of the matter is, we can withhold money from these cities. Otherwise, it becomes a real civil war. I'm concerned about it, but we've done it before. Um, I think, I mean, that's the fascist stuff. Like, for example, um, let's pretend I'm 100% behind Trump, and I'm very much behind what he's doing. I don't care. The next guy can do it now. The seal has been broken on behavior that we can do now. And the next guy's going to do it. And the next guy's going to do it. And we're going to turn into a banana republic at this rate. And um, the Democrat Republican divide becomes a civil war. I remember when Bush was president, W. Bush. I remember when uh, a lot of my family is very left of center. Um, and I wasn't a big fan of George W. Bush either. But I remember there were maps going around then, and the maps were funny, but they were leftist funny. Like the left was funny, and the right was not. And the maps were people may remember this. You'd have the United States of America, the map, and it would have the West Coast and the East Coast and Illinois in red in it might have even been it was in blue. Let's say it was in blue, and they would say the United States of America was those areas, and in the middle they would call the flyover states, which is what they're called. They would call that Jesus land. And so back then, the left was mocking the right, calling Middle America Jesus land. It was very much about the whole religious, culture wars then. Now it's the same thing. Now we're just calling this, like the coasts are communists and America's the middle. It's like, will we survive this? Yes. Will there be a civil war, a literal civil war? No. Will we be weaker because of it? Yes. Really weaker. I think we're going to be really weaker. This does not get better because I believe the next recession we have, this is why I'm buying gold. This is why I'm buying more gold. Not today. This is why I'm buying more gold. The next recession we have will be a disaster for this country. And here's why. The recession brings need. Need brings need for bailouts. Federal government needs to help local areas. There won't be money for that this time. That's number one. Number two, in a recession, and this is an AI thing, when there's a new technology that allows you to fire people and the economy's good, you hold on. You don't fire people. You just don't hire new people. But when the economy goes into a recession, you fire people and you replace it with AI. So when we have a recession, AI is going to take off. Like right now, we're being told that AI is like, well, I'm not going to hire anyone out of college. I'm just going to use AI. basically it's like you're letting your old people retire. You're letting them retire, you're buying them out. It's the same idea. But if there's a recession, the federal government will not give money to states. We will have chaos, and you will also have unemployment rate going to 6, 7%. That's why I'm buying gold. Because either we rescue it by printing money, which makes gold go up, or we don't rescue it and we have a civil war type of environment, in which case gold goes up. So my concern domestically, to your point, is it almost definitely must get worse before it gets better. It's almost like you want to bring the crisis to a head. That's one of the reasons I like Trump, because he's an accelerationist. And we're having years happen in months now. But to answer your question directly, my biggest fear is that China really loses patience with us. I'm not going to say that they're in a better position than us, but if China gets irrational, our trade war will explode. It'll become a big, big, big deal. And you could have stagflation overnight in both countries, US and China, which would take the world down with it. So my fear internationally is Trump and Xi, or China, October 30th or 31st when they meet, not having anything solved, and the trade wars get worse. So they start taxing our ships, they start restricting rare earths, we start prohibiting goods from there, and you have a world that freezes. And that's the word. That would make your Civil War thing even worse. So that's what I think, if that for what it's worth.
What do you think will transpire in that meeting?
Um, I have to go with I have to go with the odds, and the odds are I don't know what will come out of that meeting rhetorically, but the can will be kicked again. I believe that meeting will end with we've agreed to have more talks. And the reason I think that is twofold. The first reason is in the last 3 days after Trump and Xi were butting heads, Scott Bessent came out and started saying things like, "Well, we're looking for a delay on tariffs." So it's kind of like the good cop, bad cop thing. And although I think China wants a deal as well, I don't think they're the first to blink on this, because if you sever access to rare earths, the U.S. economy shuts down in 6 months. We make our money selling military goods. And without those magnets, without rare earths, you're not making the submarines that we have to sell to Australia or to Japan or whoever. You're not making those things. And that would Europe would shut down too. Car sales would be done for. Now, China would suffer greatly. But I'm telling you, as soon as we stop buying their shit, they're going to give everyone a discount and sell it domestically. So I think statistically, I think we kick the can down the road for another 90 days for another talk. And the reason we're kicking the can down the road is because everyone's trying to get their ducks in a row. Maybe China needs to buy more gold. Maybe China needs to secure more supply chains. Maybe we need, it's in our best effort. How about this? Cynical. It's in our best effort for the Ukraine war to not end. Because the longer there's uncertainty surrounding Europe, and the longer we can delay the conversation with China, the more we can all get our ducks in a row. This is a divorce, and it's in a prisoner's dilemma sort of situation where everybody is pushing it off to get themselves in a better negotiating position. That's what I think. That's why Trump flip-flopped, I think. I don't know, but I think. We're not ready. We're not ready.
What do you think? What do you think life will be like in the United States by the end of his term?
Well, I mean, that's completely unfair, right? Um, I'm joking with you, but well, how about this? Manufacturing is not going to be done in 5 years. Manufacturing is not going to be done in 5 years. Uh, Stocks will either be up because we're making serious progress, or stocks will be up because we're inflating away. So stocks will be up. Gold will be higher, 6,000, 7,000. Um, I believe. I could be wrong. And the geopolitical problem will be solved with us compromising and China compromising, but both sides will declare victory. So I think I think we have to make room for China at the table, and we will. And by the end of his term, you could have a really weird situation where inflation is, say, only 3%, but the things that you don't want to buy are 2%, and the things that you need to buy are 6%. You follow? Like the way it's been with flat screen TVs, it's going to be that way domestically. I think we end the way we ended the 70s. I do. I mean, I'm not betting on it, but it's kind of like this. I'm long hedges against stagflation, and I'm long stocks if I'm wrong, as opposed to being long stocks with a hedge against stagflation by being long gold. So I think it ends worse than it starts, even if Trump is successful, because it takes longer than you think. And things like stable coins show me that we're trying to paint a turn, and I don't like that.
Well, and also, look at our society today, even versus 2008, and when Dave, Matt, and I were all talking about this, how much we've just deteriorated since 2008. Like they're just
Oh,
we're so far
yeah.
apart. I mean, just completely far
Wait,
apart.
you mean Dave?
Column.
Oh, that's right. You
Yeah.
had Dave. You had both of them. I forgot about that. Yeah, you had that was actually pretty cool. Yeah, I like Dave a lot. Dave and I respect Dave a lot. I would definitely do something with him. People would talk about that. But okay, so the 2008 comment, you know, I can give you anecdotal evidence that confirms what you feel and what everyone in the United States feels. In 2008, let's put it this way, the United States Federal Reserve is a bubble factory. They print money and try and steer it to the things they want it to go to. And when it doesn't, they try to deflate the bubble orderly. Now, we created a bubble in housing. We facilitated a bubble in housing in 2000 after the stock crash. And in 2008, that bubble popped. And I'm telling you this, we're a bubble factory. Stock bubble 1999 to 2000 collapsed. And right about that time, housing ownership started going up. So the housing bubble, there's a graph of that out there. When the housing bubble crashed in 2008, and I'm asking you this, I know the answer, it's my opinion, but I'm asking you this. What bubble did we get when the 2008 housing bubble crashed?
When the 2008 housing market crashed, what bubble did we get after that? Well, everybody was given, they had bad credit for 3 years and they turned around and bought houses again.
Yeah, yeah, right. Exactly. Exactly.
Is there
So
a term I'm missing for this? What was it? What's
no,
the
no, no,
right
no,
answer?
no, no. It's a little bit of a trick question because the bubble yes, houses are, I don't know that I call houses a bubble now, but everyone bought houses. No, there's no doubt about that. Everyone was given a free pass on that. The bubble, I would say this. This is an original thought, Rear. I would say to you that after the 1999 crash, 2000 crash, I should say, the housing bubble inflated. After the housing bubble crash, the new bubble has yet to be deflated, and it will never be deflated. And that bubble is the Fed's balance sheet. We still own fucking mortgages from then. The housing market's recovered. The Fed will never disgorge itself from all the assets that it has. It can't. In fact, it stopped QT last week or close to stopping. Powell said we're going to stop QT, which means we're going to stop unloading our balance sheet. In 2008, the whole neo Keynesian model that succeeded the welfare state in the 70s broke and nothing replaced it. And so we inflated the Fed's balance sheet and we're holding on for dear life. And now we're like, maybe there's going to be an AI bubble. Maybe there's going to be a data center bubble. All right, shit. Maybe gold could be a little bit of a bubble too. There's just no way the Fed can get rid of its balance sheet. No way. It's not going to happen. And here's the anecdotal proof. During the financial crisis that went from 2008 2011, which was followed by the European Euro crisis in 2011, the Grexit problem, during that time frame, China, this is coming from someone reliable. China was holding meetings with the US under Bush and Obama saying, we own a shit ton of your treasuries. We're worried that you're not really going to be able to pull this money back in that you're printing this time. And the US said to them, shut up, metaphorically. Don't worry about it. We got you covered. It'll be taken care of. And China's like, I'm not so sure about that. Meanwhile, 2014, there was the coup in Ukraine. Russia started de-dollarizing. China started de-dollarizing. They knew as early as 2009 this was going to happen because China started ramping up its gold buying in 2009. It started ramping up its gold buying visibly in 2022, but they've been buying for a long time. So we've been skating on thin ice or running on fumes or however you want to look at it, looking for a replacement bubble, and we can't. And so the economic model that we have is over. It's done. It's not going to come back. Financial people will be fired, never to be hired again. Blue collar people will be hired, never to be fired again. And then we will build factories, and then we hope to God people will buy our shit. But I think the world will have passed us by. I'm very concerned about it. I'm not even a doomer. Maybe I am a doomer. I don't know.
Where can people find you, Vince?
Um, uh, the Goldfix newsletter is VBL Victor Boy Larry, VBL Goldfix on Substack. You can follow me or find me on Twitter if you have a stomach for sarcasm at VBL's Ghost. I would say after you subscribe to Mike's podcast here, then subscribe to Goldfix, and we would love to have you as free or premium. And the content is almost entirely monetary, focused on the lens of gold and silver, but it's also about Bitcoin. It's also about money. It's also about geopolitics. And it's also about all the shit that we're talking about here.
I would encourage people, follow Vince, support him, what he's doing, and become a paid subscriber on his Substack. And he's doing great work. So I thank you for doing this, and for people listening. I look at all my comments on YouTube and Rumble, as painful as some of them are, but there's a lot more positive ones than there are negative. But subscribe, like, share, and then I put all my conversations both on Patreon and Substack for early access for paid subscribers. So, Vince, I always enjoy our chats, and we got to do one with Bryn. We gotta make that happen.
Oh yeah, that's right. That's right. I did you stop recording?
No, not yet.
Yeah, you had mentioned energy to me, and you wanted to talk more about energy, and I'd be happy to talk about it. But I would be remiss to not say Bryn Kelly should be the person you talk to first, because I know you want to talk about AI and energy and transmission, and she's a power trader. She's like the real deal. I would say get her on here, and I'll hold her purse while she tells you. All right.
Look forward to our next one, Vince. Thanks.
See you.
Mic drop.